We are here today with Joe New with Cherry Creek Mortgage, and we're here to talk to him about the market and what buyers are seeing and how we can better help them. Joe, can you tell me, when should a buyer contact you when they are wanting to buy a house?
Really great question, Denise. I would tell you the sooner the better, right? Because at the end of the day, people fall in love with the house, right? And they fall in love with that idea. They don't fall in love with the idea of, I need to look at my credit, I need to see what my finances are, right? That's kind of scary to some people. And so, but there's power in that. When you know what you can do at the time you're making the offer, when you know where your finances are, and we've helped you make a great short, long-term financial decision, it takes some of the stress out. So get that done up first so that we can be able to help your offer look better than the next offer that's coming in on the loan.
Fantastic.
Hello, Joe. How are you?
I'm good, Katie. How are you?
Very good. Okay, my question to you is, I often run into the problem where buyers want to wait till they find the home to start the application process.
Correct.
They're afraid that it's going to ding their credit, they haven't found it, and so what are the reasons why that is so important to do that prior to the home search?
Well, typically, people find the house they want to live in, and they would love, and see their family growing up in, and all of a sudden they fall in love with it, and they got to make an offer now because in this market it's been compressed, right? There's less inventory today than there was yesterday or a month ago or 3 months ago. And so all that timeline gets really compressed, and then they get forced into making a poor financial decision. They don't really know what they can afford. They wait to the last minute. On a Friday afternoon, I've got to make an offer at 9 o'clock, and things just get compressed, and it creates stress in their life. And so I would tell you that knowledge is power, and only if you use it, right? So let's get that done up front. Let's make sure we don't have any issues, and if we do, let's build a roadmap on how they can overcome those issues. And then let's really help them present an offer that makes sense, that sets above everybody else's.
Very good. Thank you so much.
You bet.
All right, Joe, I've got a question for you.
The pressure's on.
What would you say is the perk of going to you over an online lender or someone who wants to use a bank that they bank at?
Oh, that's a great question, and we see that a lot, right? And we compete. We're not afraid of competing. Not every bank is built the same. Not every bank has the same timelines and those types of things. And it's not always about rates and fees, right? It's not always about the cost of the loan. Those are important aspects. But in a market like we have today, sitting here in January of 2021, when there's multiple offers on everything, that knowing you can pull the trigger and get a deal done in 15 days if you had to, a big bank won't be able to pull that off today, right? And most of them won't be able to put off most of the time, right? So the value that we bring in the communication and being able to get a hold of me when you need me on a Sunday, if you need to do that, and be able to work those numbers up so that your borrower has confidence in what decisions they're making and that they can afford what they can afford and get this loan closed on time is a huge deal.
That's important to us
It
because
is.
we work 7 days a week, and
Yep.
lenders should work 7 days a week too. So communication and timeline, definitely key.
Yep.
Yeah. Like you said earlier, we've got a low inventory and we're facing a lot of buyers that have multiple offers. So what can you do to help buyers who are facing multiple offers?
That's a really great question. We've been in this market, Justin, for 38, 40 months, something like that. It's worse today than here in January than it's been in all, I've never seen it this way, right? So what we do here at Cherry Creek is we're able to do what we call a fast track.
Okay.
And so the fact is, somebody falls in love with this house, right? And there's multiple offers. They're not the only one. There's 30 people or 10 people or 5 people fell in love with the same house.
Yeah.
And so if every offer is the same, whether it be 20% down or 10% down or 5% down or an FHA loan or a VA, unfortunately the listing agent looks at one that says, hey, I'm putting 20% down.
Yeah.
And that's less risk. And the truth is, that's not true.
Yeah.
If they're all underwritten the same, there's no risk in them, right? So what we do, if you give us a time with your borrowers, we'll completely credit underwrite their file.
Okay.
Instead of giving them a pre-approval letter, we give them a commitment letter telling you that it's completely underwritten, it's subject to a contract, a survey, an appraisal, and we'll close you in 10 days. And on your third-party financing addendum, you know, paragraph 2, box 2, that says this contract is not subject to buyer approval, that makes your offer look a lot like cash. The difference is there's not a lot of people, not a lot of companies that have the bandwidth to do that.
Yeah.
And if you give me the time, then all of a sudden we make that offer of look a lot like cash, subject to an appraisal, right? So I would tell you that in this market, we win deals because of that.
Yeah.
Okay, next question that we get asked all the time. Closing costs, down payment.
Oh,
What
yeah.
are we looking at closing costs with you?
So closing cost, it costs as much to close. It's really kind of funny, right? Actually, what we're talking about is settlement charges. And the thing you need to understand and know is that settlement charges are made up of prepaids, right? And then third-party fees they pay one time, they're never going to pay again. The closing cost on our loans in this market, when you think about our fees of $13.95 and the title fees, right? Because that's the only thing I can control is the $13.95. The rest of it's title fees and the third-party fees that you need to go your loan. Whether you're financing a $40,000 loan or whether you're financing a $3 million loan, it runs about $3,200. Third-party fees. Then you've got your prepaids. If that borrower's escrowing their taxes and insurance, then they've got their prepaids on top of that, which is basically 15 months worth of insurance, 3 months worth of taxes, and whatever day's interest for the month that they close in. So depending on that number can change a lot, right? There's really nothing we can do about that. But when you think about it, $3,200 covers third-party fees. Third-party fees that they close one time and never use again.
So for down payment for first-time home buyers, what would you tell them is a good number they should have?
So right, so I get a phone call almost every week that says, I want to get approved for a loan, but I don't have my 20%. And I go, well, who said you had to have 20%? And you don't, right? If you're a first-time home buyer being a borrower, a buyer who has never owned a home in the last 3 years, whether you owned one 20 years ago or not, they qualify as being a first-time home buyer. And the minimum requirement is 3%. And if we fall into the right zip code and we have the right income, then maybe you're available for Home Possible Home Ready, which is also a little better rate. It's also the MI on it's a little less expensive. So 3% on conventional, 3.5% on FHA, and then VA obviously is, as long as you're under the conforming loan amount, is 100%.
So that brings me to the next question.
Sure.
Who would you tell to use FHA versus conventional?
FHA gets a bad rap, right? They do. And it's a really great loan for the right borrower. We have borrowers that have 700 credit scores that for one reason or another need to have an FHA loan. An FHA is a great product. It's made for first-time home buyers, and interest rates are better on the FHA loan, right, than they are on a conventional, right? And VA is better than that. So when you look at it, it just depends on their particular situation. When somebody's got a 700 credit score and their debt-to-income ratio is over 43 or 46%, you push them into an FHA loan because it allows you to go up to a higher debt-to-income ratio. That would be a reason you would go FHA, and they're perfectly great buyers.
Lastly, what do you see for 2021? I know we've talked a lot about forecasting and the market, but what do you see right now? What do you see leading us into 2021?
Where's my crystal ball?
I know. Like,
It's been a really interesting 2020, and it's been a really interesting first of 2021 sitting here on the day after inauguration, right? I don't know. If I believe the people that I follow tell us that we're going to be in this market for a while. Well, what does that mean? Probably in a channel. When you think about rates, what you're really asking is where are interest rates going, right? That's what you're asking me? And I don't know. I don't trade currency. That's not what I do. But I will tell you, I follow some people who are really smart about it. And we really believe we're going to be in a low interest rate environment for the next 12 months, maybe 18 months. Are they going to be as low as they were back in June? I don't know. Here's what I do know. I know today where interest rates are. I know today what kind of buying power we have with these interest rates. I know there's going to be a cost to waiting. If you wait too long, it's going to cost you. It's going to cost you an interest rate. Today's a really great day to buy a home. A year from now, when we get interest rates that are less or more, it's going to be a really great day to buy a home, right? Or a market to buy it in. And so the really cool thing is we can do some really great things with spreadsheets, and we can help your borrowers figure out, is it really time for me to buy or not? Am I in a position to make a good financial decision? And we love doing it.
Yes, Joe, thank you so much. You're
It is a pleasure.
expert, and we are very thankful to have you as a preferred partner for Torelli Properties Group. And if someone wanted to contact you, Joe, how would they do that?
Here's what I know. Okay, I've known you a long time. I've worked with you a long time. If you're looking at buying a home today, this is the team you should do it with, number one. Number two, I would tell you that you can go to joenew.com, really simple, joenew.com. You get on the website, you make application there. My contact information is there, or you can call me on my cell phone, 817-721-6067.
Yes, or you can call one of us, and we will connect you with Joe and his team. So thank you so much.
It's a pleasure.
We're happy to be here and answer some questions for us.
Absolutely.
Thanks, Joe.
Thank you, Joe.
Appreciate it.